Hello, I am Charles Rubenfeld, and this is the second episode of the Charles Rubenfeld podcast. I am here with Andrew Wang, co-founder and CEO of Valon. Valon is a very exciting company that I also happen to work at in the past, so I'm very biased. But it's one of the fastest growing fintech companies in New York. It has transformed the mortgage servicing industry, which we're going to talk a lot about, and currently has 100 billion in mortgages serviced on its platform, and has grown into a top 15 U.S. subservicer in just the last few years. So I'm excited to talk to you, Andrew. We've worked together, and I think you have a lot of interesting things to say. You haven't been on a lot of podcasts, so I'm also excited to get you out there to the world. But thanks for coming on, and I
Awesome.
think it's going to be a fun chat.
Awesome. Thanks for having me.
Of course. So I think most people don't know too much about mortgage servicing or Valon, so I think we should start there. Uh, why don't you just give us a quick rundown of Valon, its history, and in particular the origin story, which I think is very interesting from you being on the investing side of mortgage and then deciding, hey, I should actually just start my own thing to solve the problems I'm seeing.
Yeah. So Valon's a really funny accidental company. So when I started off at Soros, I worked on what's at the time was the mortgage-backed trading group, which did mortgages, invested in whole loans, and a whole bunch of other things. But the roots of the group were fundamentally in mortgage-backed securities, specifically stuff that came from pre-crisis, i.e., stuff that went through the great financial crisis. And as a function of that, you get a lot into like servicers, the details around servicing. And so our group as a whole just really cared about the data and all the numbers associated with, the money that was coming in and out from all the different cash flows from mortgage-backed securities. So I was the guy who started off on desk who was focused on looking at the underlying cash flows and trying to project a model what the results were. And so what that meant was I needed to, match and sort of realize what was going on with the servicers in order to understand how to predict the future cash flows of the bonds. Now they were very levered to that, and so that just became a super big focus of mine. When you start working a lot with servicers, you quickly understand that they're all working with really legacy mainframe systems, and so that sort of gives you the idea at the time, which was, hey, you should just build better systems. You should build better software. Like this really can't be that hard because it was whatever 2015 at the time, and at that point, obviously, technology had gone so much better that when you looked at modern technology relative to where servicers were, like the obvious thought was you can definitely make these much more efficient and much better. So I actually started off originally looking for folks to build the company because I was on the investing side. I didn't really think that much about starting a startup, but I couldn't really find anyone to go and do it. And what ended up happening was that not only did sort of time progress and I couldn't really find the right sort of opportunity with respect to other people to work with, but I also sort of thought about, okay, if I were to start a company, like what type of company would I actually start? And basically the net was I wanted, as a person who had an investing background, I wanted to work on a company that was effectively had very, very high alpha and very low beta. Said differently, I didn't really want any headwinds with the business, right? Like if you look at most businesses, there's some element of, some macro trend that you're really betting on. Whereas when you look at servicing and you look at mortgages, look, it's such a big part of the United States. Servicing is really correlated at the end of the day with effectively the amount of people who want to buy homes and the amount of people who want to stay in homes, right? So just a home ownership rate in the United States. And so between those different things, it had a very, very sort of like durable aspect when it came to the resiliency of the business. Actually, the real thing that you were betting on at the end of the day was your ability to build technology to actually reduce the cost of servicing in this space. And so between those different things, I said to myself, oh, this seems like a really good idea. This is an idea where, if I built really great technology, I'm sure to succeed. This doesn't seem that bad. I might as well work on this for like 3 to 4 years and see what
How hard
happens.
could it be?
Yeah, exactly. So it's with every founder, right? Like you think about how hard it could it be. I'm not going to commit myself to this too long, but it'll be a fun journey. And here I am 6 years later, telling myself it's only going to be another 5 to 10 years. So look, I think it's really important for everybody to have a little bit of like naivete in order to get yourself to go down and really do the hard things. But I would say it's been a very interesting journey with a lot of learnings because we took, I think, a very unorthodox route to building a company and also the type of company we build versus what I think normal Silicon Valley kind of accepts.
Yeah, could you talk a bit more about that? Because I do think that's always been a very interesting aspect of Valon that I think many people don't appreciate, which is Valon isn't just building software, but you're actually servicing the loans yourself. And now you have hundreds of thousands of loans on the platform. When I joined, I remember there was a very small number, and it was hard enough, to service a small number. So going from that number to 500,000, I'm sure was a very crazy ride. So I'd love to hear more about that in terms of actually servicing the loans and building the software for yourself.
Yeah. So maybe one thing I'll say before that is what Valon is what a investor really wants. And so much of the business plan, which I will tell you is like a really dumb idea in retrospect, but look, life is full of trade-offs. Like there's some parts that are good about it, some parts that are bad about it. But the notion was we wanted to build a company where we saw it as high expected value, but more importantly, like high certainty, otherwise known as high Sharpe ratios, right? You want to like really lower the volatility in building the business or the ideas behind the business. And so what that meant was we wanted a business where the thought process of what the business strategy would be was very clear. Meaning, we started the company with the idea of building better software, but realizing that better software is generally really hard to build because it's big, it has a lot of investment, it has a high amount of breadth, it really takes a long time to build. And so if you start off building a actual services business, then you can slowly but surely progress into building your software business. The second part was we were pretty convinced that if you actually build really great software, you could really demonstrably make a better and more efficient and much more profitable services business, which would also lead into you building a better software business. And so we decided, hey, this can't be that bad. Let's go build a large services business, one that requires you to normally have hundreds, if not thousands of people. And by doing that, we'll learn how to build really great software. And then we could go back and sell software.
Yeah, makes sense. Maybe I think it'd probably be helpful for folks to walk through a bit about the mortgage servicing industry and how Valon is actually using software to improve things. I think most people maybe understand the basics of mortgage payments get handled, and there's property insurance and property tax, but maybe walk through an example or two of what it actually means to build software from scratch to solve a lot of these use cases that for maybe legacy servicers are much more challenging.
So the truth about most mortgage servicing, with what I consider like a very uh, small but really large TAM group of businesses, is that it's these specialized vertically integrated software businesses and services businesses that are like kind of one and the same in terms of how they're involved, right? It's like I put mortgage servicing often alongside running a hospital, not because healthcare and running mortgage servicing are very similar, but more so because of the amount of technology that is required along with the services that fundamentally makes it like a hybrid-esque business, right? You need both parts of your business to actually perform the operations that you need to have. And what that means is that when you look at historically how these businesses, the services part actually, have been built, what happens is that, obviously, whatever 50 years ago, the services ran without technology. And then someone builds one piece of technology that like really is the anchor core of that business. If you think about banks, that's the banking core. For servicers, there's the servicing core. Hospitals, same sort of thing, right? They're big billing systems. And what happens over time is that as people introduce new regulations and new bills and or new sort of aspects of the business, you keep tacking on more software systems to handle those different things. And over the course of 50 years, what you have is this like Frankenstein of a, what I call spaghetti coding type system, right? Where you have this core system, which does like the true core thing that the system needs to revolve around. It's effectively the ERP of the underlying business. And then you have all of these like wrapper systems, which really number in the hundreds, right, for most of these businesses, if not thousands, which basically form in its entirety holistically the quote unquote system of record and the systems necessary to actually support the operations. And so for servicing, when you talk about it, you're like, hey, like you just have to do like mortgage payments and you have to just, make some insurance payments go out, handle some loss mitigation, some random stuff. But the reality is like that core that most people have it's like a ledger, right? It's like I said, ERP, it's a ledger. That's what ERPs are. It's a ledger. And so when you have workflows, well, how do the workflows tie to the ledger? And historically, it's like there is no workflow, right? The core systems for most of these guys still do not have a workflow system. So you have a workflow system that sits outside of your ledger system. And so how do you tie the two together? You start pointing them at each other. You kind of like, interweave them and they like kind of go out of sync. Similarly, it's like when you think about payments, right? A ledger system is not a payment system. So it doesn't mean it actually reconciles with cash. And so someone says, I'm going to do all this, ledger movements. And then they say, okay, now this is how the cash has to reflect. Well, what if it doesn't reflect? How do you deal with it? Where did it come from? A lot of like syncing issues. And so that's what really makes a big difference today for these type of businesses. And that's why, for example, you see someone like, NYP and some of the New York health systems actually move and spend the billions of dollars to move to a more holistic, single source of truth sort of system of record, right? Because there's so much lift that is generated when it's all tied together in like one single system. And that is what we're fundamentally building for servicing. And that is what a lot of people want for across, what I consider, again, this sort of cast of highly regulated, super, technology enabled services businesses.
Right. So essentially, what we're getting at is servicing has the same problem that a lot of regulated industries have, which is you have this system of record software that's underpinning everything, but it's 30 or 40 years old or something like that. And uh, people just end up building all these things on top of it because it's hard to remove, when the real answer to solving the problem is you have to build a new system of record.
Exactly. It's like a bundle. I mean, I think Parker Conrad's like pretty well known for this, right? The bundled sort of software idea. I think there's numerous examples across large, regulated industries. It's just a question of like which ones are reasonable to tackle, which ones are, really driven by this ERP being a lot better. And, the question is like, do you have a interesting angle to get into that business?
Cool. I'd love to talk about AI. So, AI on paper should be something that has a big impact on your business. When you started it, AI wasn't really a thing, but software was, and so right, the idea was you could use software to automate a lot of aspects of mortgage servicing operations. Um, but now we have AI, and I'm curious to hear how that's changed the way Valon's approached building out its software and its operations. Has it been as, let's say, helpful as you think from the outside, knowing how great these models are, and maybe how have you guys used it to change how you're building things?
So I'd say there's a lot of interesting topics that you can talk about when it comes to AI and like these type of businesses. Um, I'll go like in no particular order, but this type of stuff, like I think I personally, at least, we talk a lot, but I think a lot about when it comes to like business building, like the implications, like more on a like on different meta levels, right? There's like the meta level of like, can you sell your business more effectively to clients? Can you build more effectively? Can you utilize your product more effectively? And so maybe I'll go in like no particular order, but the first thing I'd say is it is both the best thing that could happen for the company, but it is also the highest risk thing that can happen for the company, right? Where I think if you are a believer in the, scaling laws when it comes to test time compute and whatever else, or inference time compute, um, you realize that building as quickly as possible and becoming the system of record is the way you can build a really, really generationally defining, like super high enterprise value business. And so you can utilize the technology today to both improve your products and also build faster and also sort of sell faster. But you also have the dynamic of like, we all know we're kind of running against this like other clock that, might come and eat you. So like that's part one of it. And if you branch from that, that sort of like gets you to a couple of different elements, right? One, which is the fact that today, for even a super complex product like ours, there is much more will and desire by industry incumbents to use our product because of this like big AI thing that's going around. Said differently, if you consider like what people normally think about, especially in a specific space like this, right? Like my sort of rule of thumb is that people in sort of industry positions generally have like a 75% fear dominated factor, 25% greed dominated factor. It's actually really interesting today because the way I sort of see it, no people are no longer driven by their fear of quote unquote losing their job or like new technology, because their boards are basically like hammering down on them saying, hey, you got to use like AI, like if you're not using AI you're going to die, and so go do something about it. And so people, I think, are more willing than previously to adopt new technology and move at a much faster rate, which is good for businesses like ours. And if you've already built up the reputation like we have, then that like really lends to the credence of us building and selling our software product much faster than we thought we originally were able to do. Obviously, the second part is like when you're thinking about building like technology and building like coding and doing whatever else product iteration, you're greatly helped by codecs coming out, obviously cursor coming out, and all these like different things. Like what we build as a product is, there's obviously the super robust requirement stuff like payment systems and ledger systems where you don't want to be vibe coding, but there's also a whole bunch of like really honestly kind of, I don't want to say trivial, but definitely not hard enterprise SaaS products where you can basically put those out pretty quickly these days. And so that kind of checks that box really, really quickly. And it also gets into some like other interesting questions of like, should you go with a business model of saying, hey, do I actually want to build some modular no code product that people utilize, or do I actually just want to like kind of give people the ability to vibe code really quickly, add-ons to whatever interface and whatever UI customization they want. So that's like bucket number two. And then bucket number three, I would say, is when it comes to like regulated businesses and just ultimately how AI works and like what people kind of accept. I think one thing people like we understand and we see day to day, but I think people don't like outside at least of the industry don't, and even people who are industry incumbents but are not super AI focused don't realize is how much of what people want from LLMs is not how I think Silicon Valley views it, which is like agentic LLMs that kind of just like go do whatever they want. It's actually they want to narrow it to decision making that is much more risk adverse and confined. Meaning, I'll give you the example here, which is let's say you have like an LLM that is like a pseudo replacement for a doctor, right? Like if LLM said, "Hey, Charles, go take this drug because you're feeling bad," like you're gonna be like, "This is kind of awkward. Like I'm not really sure. Like maybe it's hallucinating, whatever else." But what if it said, "Here's the list which has been validated. Here's the list of all like liver medications, and you have a liver problem." It says, here's a research report of like 1, 2, and 3, and this is the best medication. And your doctor says it's like 1 and 2 or 3, and they're like, one is the best out of 1, 2, and 3. Much more inclined to say I'm going to pick one out of 1, 2, and 3, right? And so it's like it's a recommendation thing. And I'm not saying it has to be a recommendation thing, but it's the space of possibilities that people want you to pick from is much more narrow, and they want the LMs to go pick from that as opposed to pick any choice of all choices. Last example, payments, right? It's like you don't want the LLMs to be deciding how to balance ledgers, right? Or balance like accounting. But if there's some issue, you would rather have it tell you which suggested answer is so that you can go fix that entry. And so that's what I would say is like that's what people expect out of it. And so for us, when we think about building systems and software products, we're really using the AI in a way where it's generally used on tasks that it's almost verifiable, but because of noisy data, it's hard to actually determine which one it is. And so people can get comfortable with the decisions we're making with the LLMs as part of the product. But they still can bound their understanding of what that product does so that they don't feel like it's completely going out of whack. Could that change in the future? Like absolutely. But I would say for the foreseeable future, I don't really see people wanting to go outside of that sort of box, especially in a regulated space, because it ultimately boils down to, can you go in front of a regulator and explain why you picked that decision? That is explainability is by far the most important thing when it comes to regulated spaces, which, as we all know, like LMs can like, shoot out a whole bunch of like answers when it comes to like the text, but is it like actually explainable? Like I think it's somewhat debatable.
Yeah, this is something I've been thinking about in the context of basically can LMs consistently do the same thing, and when that matters. Like basically, are they kind of deterministic, or I don't know the right exact way to put it, but there's a lot of examples, right, where you want to know that 100 times out of 100, if you do the same prompt, it's going to have the same output, and LLMs are just not that relative to other software. And so I think that that's similar to some of the things that you're getting at that I've been thinking about, where there's certain kinds of tasks where there's the tiny bits of hallucination or different answers each time is actually not a big deal. And then there's other tasks where actually that makes it useless to use LLMs.
Yeah, like the test that a lot of our clients and a lot of other folks across like regulated industries always say is it's a in front of Congress test. Like, how do you
Yeah,
explain why you made this decision? And it's like, it
right.
doesn't matter if it's like 99 times out of 100 correct. That one time you will get shot down and you will get, effectively be the poster child of why something shouldn't happen. And so that's the risk people are constantly focused on. And this just goes back to my, fear versus greed thing, right? 75% fear, 25% greed. This is a huge fear factor for them.
Another aspect of AI that I'd love to get your take on is how it's changing how people are building businesses. So you have these AI roll-ups in a lot of different industries where you're buying up existing companies and applying AI. Maybe you can make the argument that that should happen in servicing. There's a lot of, let's say, old school servicers that have a lot of loans and are inefficient, and so maybe there's a value in buying those up. But I'd also just love to hear your view generally about these AI rollups, whether it's in mortgage or outside of mortgage. Uh, will they succeed? What do you think of these ideas? Um, I'll let you take it away.
My biggest problem with these type of ideas is that they actually run into the same problem that the older generation of like tech enabled services run into, which is it's not really a question of whether or not technology can make things more efficient, right? Like, sure, you can do it way faster now, way like more efficiently, right? It's really a question of whether or not like your technology, and when I say it's a question, I mean by like to change multiples, which is like the business of AI rollups, right? Um, it's really a question of like, can you fundamentally change the quality of the business? And like what Valon was unique about, which or was unique relative to a lot of the other tech-enabled businesses in the space, was we fundamentally knew going into business that our job was to change the quality of earnings. Meaning, if you look at the servicing business, right, like it has all the qualities of a really fantastic business. Subservicing is a capital light business. It is a generally like macro agnostic business, right? It's like it's countercyclical. When recessionary scenarios happen, you actually earn more money, not less money. And if you have like the ability to technologically deal with the spike in labor requirements, you're actually even better off for it, right? It's long recurring contracts, super regulated space. Like so many of the different properties of mortgage servicing are very, very good when it comes to a quality of earnings business. The one part that like absolutely sucks is the margin profile. And like that is by far and large the reason why nobody likes that business. And they always think it's a terrible business. So it's a great example of like if you had tech enabled, mortgage servicing, which we are today, and like if that were, something that a world where Valon did exist, someone came in with AI enabled services, I think it would work fantastically. Um, I think the problem is that people often apply it to like just any space where AI could be really, well received, not understanding like twofold the sort of implications across the industry, and then two, are you truly like a business that's driven by the technology, or are you a business that's driven by some other like dynamic, whether that be relationships or whether that be quality of services or something like that, right? Like two examples here that like are obviously super hot today. Law firms, if you do an AI roll up of law firms, sure. Could you do like some level of like the mass produced lower end sort of legal work? Sure. Yes, you could probably do it, and you could probably get some like lawyers who are very tech enabled in terms of their utilization of AI, and you can probably pump it out a lot of work, but it's going to be a race to the bottom, right? Because like someone else is going to do that, and therefore at the end of the day, you have like no real competitive advantage in this, and that's not a great business because fundamentally it's like there's not like a price setting aspect of it that keeps that price up, so it's not about market share grabbing or anything. On the other hand, if you do higher end legal work, it was never about like the actual work that was produced, right? Like sure, you could do like more work, but it was always about the partner like being a really, really well regarded person and then like getting their advice on something. And it's not even their like actual advice, it's like my trust of them, right? Like I trust that this person knows what they're doing. And sure, could I get to a place where I trust LMs, but like we're just not there yet. So like I think like law firms are a really great example of this, right? I think another one I hear a lot about is like people rolling up like um, effectively accounting firms. And again, I think that's like could be okay, could be better, but also at the end of the day, it's like you're one of two types of accounting firms. One is like you're a rubber stamp. Actually, this is a great one. a lot of people forget that accounting firms, as well as like I think some people are looking at fund administration and other sort of like super high knowledge work, but like rote knowledge work businesses. It's that's a stamp. Like I go to KPMG, I go to whoever else for that stamp. That's the reason I do it. And so you could go do as much of like your crazy work of like making a better service. Doesn't matter. It's the stamp. And it's like I go use Sitco because it's my fund admin. I need that stamp. And so I think people like forget, like they see all this bloat, right? Investment banking is another great example. They see all this bloat and they think, oh yeah, I'm gonna go like just take out the entire equation, not realizing not only does the business not really care about it, it's not really where it comes from. But by the way, we haven't even talked about like the whole task of like firing and cleaning up and managing people. Like this is like the whole separate thing, which like I think people all forget, which is the people who are building these businesses, like it's a bunch of like really smart, like younger folks from Silicon Valley, New York. You're not the type of person who generally like it would be a stroke of luck for these people on average to be really good at managing like large multi-hundred person businesses, right? Like that is a whole different skill set, which like candidly, like most people aren't very good at. And like that's kind of hard.
Yeah. Do you have a framework then for where you think there is opportunity in either AI roll-ups or just AI enabling folks to start different types of companies or do different kinds of structures in this day and age, or no?
I think it has to be one where two things are true. One is less important, but it is something you should think about because there's I think there's like two parts you should generally be really worried about, which is the time length and then the effect of your AI sort of improvements on your business. And so the first is like ask yourself really hard and long the question of, hey, what does this actually do to the business? Like, who actually cares about it? Like, what does it actually fundamentally change about this business? Right? Like, a great example of this is, people talk about like mortgage origination, right? Because they like really, really like think that, hey, look, the cost of origination is so high, whatever else. Turns out the majority of mortgage origination compensation isn't like for processing whatever else. It's for paying basically loan originators who are effectively, relationship managers. And so it's paying for the relationship, you're paying for the lead. So it doesn't matter how enabled you make that business. You're not changing the fact that it's a relationship based business. And so great, like, there'll be some marginal movements or whatever else, but like, you're not really going to change like how much of the business is affected by that part of it. So I'd say that's like one thing, which is like to look for businesses where ultimately technology really truly gives you like an embedded advantage. And then the second thing I would think about is the durability and like the length of the cash flows being valuable, right? Meaning, uh, in this world, ideally, if you're going to go do that and you're going to raise capital to do that, you want to go for a business where it's a little bit of like there's some level of a network effect or winner takes all type of business, right? Even though like that's generally not something you really like, but in this case, I think it is good because that means that if you conquer the space, right, and you become the most, effective and most AI sort of enabled services business, then you can dominate the business thereafter, and nobody coming in could do very much about it. And you would like that because then you can kind of just like ride along with, effectively you're along the models themselves, and that's like a pretty good place to be. And so I'd say those are like the two things I would try to like think about a lot. I mean, somewhat relevant to what we did historically, but I think it is even more true so today than ever.
Makes sense. You guys have raised a bunch of funding rounds. You raised a Series C last year. I'm curious what you've learned along this fundraising journey, coming from the investing side, but I don't think you're doing much venture capital there. So would love to hear more about that and lessons learned along the way.
The funny thing is, I actually use the capital that we have at the company to do a lot of mortgage bond trading and MSR trading. It's actually a profitable activity for the company, but unfortunately, the board has told me that that's not a very good use of my time, and so it said, please stop, even though it makes money for the company. Yeah, capital. I think capital people don't realize is actually debt. Like everything in uh venture land is fundamentally debt. You're just taking different types of debt. It's when I say it's debt, I mean the properties of it feel more like debt than they feel like equity. And it's just like variations in forms, right? Like when you hire someone who isn't really qualified for their job, but you're taking a bet on them, you're taking people management debt, right? When you take you sell to a client something that you're not yet, you're taking on like reputational debt, right? When you go and you tell an engineer that like they need to build something really quickly because the company is going to be worth a whole bunch of money, you're taking on like morale debt. And so venture capital fundamentally is like this debt filled machine, right? At the end of the day, in different various forms and flavors. And get valuation is just another form of that debt, which has a lot of different properties associated with it. Now, as I say that, as a person who used to do a lot of debt and invest in debt and like do really like crazy structures with debt, uh, I also realized that like I think much more deeply today than ever that like, well, it's like kind of the situation with the US right now, right? What's the fastest way to get out of a debt crisis? Just grow faster. Like it solves all your problems. It doesn't matter. All your problems are solved with growth. That is the fundamental truth. And so you
I
end
think
up
that's what
realizing,
Elon said this week
yeah,
after
exactly. I mean, it's like,
being
but
disappointed
it's
with
so true. It's
Doge.
just like absolutely so true, which is
It's 100% true.
when you think about like all that debt you've taken on. By the way, what that fundamentally means almost always is that like most startups suck at people management. Most startups suck at all the other parts of the business, right? Like you're just doing wild stuff, right? But what you're really good at is growth because that is actually the way you like solve all of your problems. People are upset, you grow it faster. People are upset about promotional opportunities, just grow the company more. Like they'll have more opportunity. People are complaining about compensation, grow the company more. They'll work harder. People, say like they don't want to work that hard. You tell them, do you want to lose the opportunity of your lifetime? All forms of this. It's fantastic.
Do you think that's underrated? Just to push back, because I think Paul Graham has a famous line about this from a long time ago. So, do you think it's still underappreciated by people in startups?
I don't think people really understand it to the degree we do because I mean, this. We went the opposite route, right? Like we said, let's try to operate the company really well. Let's be so absolutely disciplined on like I mean, I think in relative to Silicon Valley, we run one of the most complicated businesses out there, right? We run a heavily like we have a capital markets business, we have a huge operations business, we have a trading business, we have a originations business, we have a software business, we have an insurance business, we have a partnerships business. Like we run so many different businesses at the same time, and I think the way we went about it was really predicated on the thought of, hey, let's try to do it really well and win because we do really well in a lot of ways, not like because we're really good in one way. But to answer your question, I think really good entrepreneurs really get it. But I don't think you really understand this other side of the equation unless you've been offered the other side of the equation, right? Like let's say you started a startup where um, you basically were just on a revenue growth train, right? And you like kept doing that. Sure, like things were good and like, raise money, whatever else, and things are bad. Like probably think about it as like, I just need to grow faster and I need to go raise capital. Like there's just those two notions, but there's probably not as much of the notion of like, but what if we just made money as a business? What does that look like? Because there's like not really as much of that approach, right? It's like when you run, not picking on like any particular company, but I'm sure you realize this, right? From like the Uber days where it's like, they were burning a lot of money and they were spending a lot of money. And like, what does Uber look like in 2016 not burning money? Like, there is just like no version of it, right? Like, you don't even think about it. And so I don't think people don't understand it. I don't think they understand like how much harder it is if you like the other side of the world if you ran with better operations, better whatever, and just how much harder it is, but also uh, what it means to run your business that way. That's probably my best answer for it.
Yeah. On that, Valon has built, as you mentioned, a very complicated business, or rather, the industry is complicated, and Valon has built a business in a very complicated industry. Um, and I think you've learned a lot about what it's like to run a startup, but also what it's like to run a very large operations business. So I'd love to hear more about that. What you've learned building out a startup that obviously has software, but also has this big operations component that I think many companies don't have to deal with.
I think the biggest thing is there's a lot of, like I said, naivete when it comes to this assumption that like all like again, I'm just picking on all startups here, right? Like we all do this here. We're like, let's go hire like some guys from like McKinsey and Bain. Let's go hire some guys from a bunch of investment banks. Let's go hire some people from private. Let's just like hire these people, right? I actually had a younger founder like tell me he was starting a company, and he was like, I'm bringing this guy who worked on like who worked at a private equity firm who like did whatever cuts and sort of LBOs and whatever else. And I was like, doing the mathematical modeling is just so fundamentally different than actually doing it in person, right? Like I will tell you to this day, and this, we're like pretty disciplined about this, still have so much trouble getting people to actually fire people. And like, if you're really good at running a company and you're really good at operations, it's a performance management game. And so like I think people like don't even appreciate until they run these type of companies. Like, why do people have rifts? Rifts are there because managers can't get themselves to like do the right thing. It shifts the emotional burden from like, hey, it's the manager's fault to it's the company's fault. And obviously you incur the hit as a company from being like, bad at whatever managing his finances. But ultimately, like if everyone was really good at managing their people, like you wouldn't have that problem. And so rifts are fundamentally like some version of basically forcing that equation. But there's so many of these across the company, and that's why like people get bloated, because it's like honestly really hard. It's human. It's people. There's like a way to do it that is obviously more human. There's a way to do it that's like a lot more callous. And like, how do you balance those two when you're trying to survive as a company? And so I'd say like first and foremost is just the reality of like getting people to run operation businesses is a lot harder. Like, you think building product and doing hard intellectual exercises is hard? Like getting people to do human things is like I think even harder. And just because it's like much less trained in quantity, at every single level. That's probably one part of it.
On that, just real quick, uh, I know Valon's gone through different phases, or also just had lots of different folks that you've hired across, let's say, mortgage industry, tech industry, sometimes a blend. And I'm curious where maybe you've landed there around how important is it to have experience in the industry that you're hiring for. How much do you want to blend folks with both tech and mortgage experience, or is it better to keep them separate and have them work together? Just riff on that with me a bit.
Two things. I'd say industry matters a lot less than industry is a proxy for uh weightings around a couple of different parts. Cultural is one of them. Ability to understand multiple components is another, i.e., like risk versus uh let's say like efficiency or some other sort of variable, compliance, right? Um, and between those two different things, you're trying to really like suss out their understanding of and context of the type of business that you run and what you care about and what you're looking for, and also just to sort of their overall experience, right? So, as an example, mortgage is an industry where there's a lot. It's a lot more turmoil. It's a lot more chaotic, right? And so, if you find someone in the life sciences businesses, even if they ran operations, it's just not the same business, not the same type of people, and like it definitely gives a little bit of shell shock for people who don't understand it. Another great example of this is that like in mortgage, there's a lot more turnover, and so like you can hire someone, at least in the call center side, from a retail operations like Target, and they're like much more used to doing it. They're much more accustomed to dealing with stuff like that. And so I'd say people management, if you've done it at sort of large scale, like there's a little bit of like I don't want to say skill as much as like an ability internally to like to deal with it. That's important. That if you haven't done it before, like it's just very hard to find people who can suddenly deal with it tomorrow. And so that's probably like one really, really, I'd say, key part of hiring. The other part of it, I think, when it comes to like picking people and like what you're trying to do with them, right? Obviously, in the beginning, you're like pretty scrappy. You're trying to just hire people to do a whole bunch of different things. And so, like, I think a lot of the rules just go out the window. But later on, you're much more focused on doing things in or having specific functions do it in a very excellent way. And so, for example, you probably care a lot more that like you can run stable operations with not like the most tech savvy approach of it, but you care a lot more that like the morale is more consistent and normalized and whatever else. You want someone who's like more of a seasoned leader. So you probably don't want someone from tech. You want someone more from like mortgage. Obviously this is not like as relevant, but like conversely, it's like you want the engineer who can build really, really great systems, and you want them to have like no understanding. You don't really care about the fact that they have any industry knowledge. So I think it just kind of specializes more later because you're trying to buy very specific qualities out of people. But the long story short is, um, it matters so far in as much it affects the specific type of uh, role and business that you are currently operating.
Right. So I guess what you're getting at is kind of the different phases of building the company, that the kind of people you're going to be hiring at the beginning are going to be maybe different than the kind of people you're hiring today.
Yeah, like definitely. Like today, we are so much more focused on having the people who run each or work in each department be excellent, because we're at that phase of the company where going through growth, where we have a lot of big business contracts, and what I want to know is that what we're doing is excellent. Like I can spend the money now, right? I can get the people in place right now. I want to know that we're excellent. Versus before, it was I just want to know that like what we can handle it, right? And rather than hiring a bunch of people who all can only do one thing, there's just too much context switching and too much like interweaving of different sort of requirements that someone has to handle, that I would rather be able to handle under one person, right? I need to call Charles and say, Charles, I need you to like know how to handle this call from this random homeowner, but I also need to like do analytics for customer service, and like I need you to do both of those because that's really important. Whereas today, it's like, no, I need one person who's really good at dealing with the homeowners, and like they just focus on it. There's so much volume for just that. And I also need someone who can pump out analysis for me that's actually understandable and valuable for me to actually action on. And I don't need those people to ever. I want the best for both. I do not want one and the same.
Another thing that this reminds me of that I think we went back and forth on when I was at Valon was building from first principles. And I think a lot of people like talking about doing things from first principles. Um, but you coming to the mortgage industry, you knew basically very little, right, about what it's actually like to run a servicer day to day. And I think there's some balance between you could try to do things completely from first principles, and then realize that maybe actually there's ways that the industry have done it that you can learn from to inform it. And so, how do you think about that balance between maybe something from first principles seems much better, but actually there's some kind of learned wisdom from the ways that folks have been doing in the past that maybe people are discounting?
I think it's like, unfortunately, a little bit like um, building startups and the lessons that I learned along the way, right? Which is you don't really understand these things and you don't understand the wisdom until like you actually go through it, right? There's a book by Elad Gil, which is like I forget the title of the book, but it's
High growth
basically
handbook.
yeah, exactly. Um, and I've read all of it. And I can tell you, like, having gone through every phase of the company and now getting to like the, whatever second half of the phase of growth, or second phase of that book, like I still every time read and be like, now I understand why they said that. I get what they mean by this part and that part. And like you literally understand it, but you don't understand like the depth of the statement and like all the peculiarities and all the parts about it until you actually live through it. And so I think, look, if you're not first principled about it, you're just not going to make anything new. Like you're just going to copy, right? Like that's the easiest thing. That said, if you're overly first principled about it, uh, and when I say overly, it's actually funny because I would almost say you're not first principled enough about it, actually. It's because you don't understand the context behind the context, or like the meta of the meta, like the other parts are going. Like you might have a policy, right, that doesn't make any sense from like a first principles perspective when you consider the risk of the business. But it turns out it has nothing to do with the risk of business. It's actually this overwhelming other factor, which is like the type of people you can hire and like what's realistic out of them and whatever else. And so those are the things you don't really understand until you like go into the business and have a super deep understanding of the business. And by the way, that's why I think like again going back to the AI roll-up type stuff, not that this was your question, but like that's the other part, right? Which is like you have to deeply understand all the nuances of the business, the people, in like what people care about, what people don't care about, the risks that you take. That's when you know how to build these type of businesses.
You had a quote that you said to me once that stuck with me about startups, that startups need to make 15 decisions quickly and be 75% right, instead of 5 decisions and be 90% right. I think you were actually telling me this in the context of something I should be better at. So it really stuck with me. But tell me more about that. Why is it so important for startups to move quickly, even when you're probably going to be wrong a lot of the time? And how have you kind of thought about that at Valon?
Yeah, so this is actually talking about like things that people don't really understand until they like actually go through it. Um, I think that like a common thing people say about startups is they say, "Hey, you have to move really quickly because you have to like things change and you have to iterate really quickly and blah 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 blah." Right? Um, if you think more deeply about what's going on here, right? Uh, and obviously it depends on like each different space and like how it works. Like the fundamental principle is shots on goal, IID, you should win and succeed as long as you're actually decent at what you do, right? Like that's like the essence of it. And in a vacuum, if you're doing like, some sort of really, really small confined consumer product, like that should in theory work, right? And like people who are really good at consumer know how to play that game like really, really well. Um, what I think if you take a deeper level and like appreciation for it, especially if you're not just doing a single dimension like consumer type product, right? Like enterprise SaaS is actually a great example of this in my mind. What you don't realize is how much that applies to every single part of uh, the process of building a business, meaning every meeting you take, every idea you pitch, every moment when it comes to news that changes how people think about things. It creates, if you think about it from that vantage point, right, like multiple orthogonal vectors, cross producting all of that, like really a lot of like situations, quote unquote, where you can like, take advantage of it and do well, whatever else. And when it comes to monetizing and doing well on those different things, right? It's not really about like getting one or two really, really right, right? I mean, like you can look at it again from different vectors, right? It's like for consumer products, obviously you need to get a product that works, but if you try a bunch of different ideas, that fundamentally gets the same thing. So if you look at successes at one thing to get right, then obviously 90% success on success is important. But when it comes to like all these like different aspects of it, it turns out more often than not, it's about getting far enough along on a bunch of different things that like crisscrosses itself into a thing that actually works enough to fit the opportunity, right? That gets you to the next stage. Like we pride ourselves at Valon that we like are really, really good at what we do. But like you and I both know that like honestly, we weren't very good. Like we were better than the industry, or at least industry perception in a lot of dimensions across the board. But like any single one dimension, we would look at each other and we'd be like, yeah, that was really like shit work. Like that was terrible. Like I don't know how we look at each other and like think that we like did good work. But it didn't matter, right? Because it's just like the bar relative to what the industry is, and like that's why you're in the space to begin with, like obviously all those different things. And so it's just so much more about like continue to move the ship ahead so that you create more opportunities so that like the overall equation kind of pans out to something that like makes it look like you're actually quite good. And then thus generates more opportunity and gets you going down that momentum train. And so I think it's just like some people think that people don't realize, which is keep playing the odds and keep playing like some way of moving forward on the board so that you look actually decent, as opposed to like obsess over perfection because you're not at that stage yet. That's a way down the state like life cycle of a company growth stage sort of question where then it becomes way more important to be like really good at certain things.
Do you feel like this was how investing was when you're on investing, or because it seems like it would kind of be the reverse, right? And this is something I've written about before as well, which is feels like investing. It's often just about getting maybe one thing really right, and as opposed to just making lots and lots of decisions and just keeping the ball moving forward. But I'm curious if you agree with that.
Um, I think there's two parts. That one part's really similar and one part's really different. I think to your point, like when it comes to equities investing, here's actually a separate. You're thinking about it from equities and macro, and then I'm thinking about it. I usually looked at credit, which is more about getting most things right and not about like actually getting like you're protecting against the downside more than you're like trying to really hit for the home runs. So I'd say like investing styles are a little bit different. Um, so I would agree with you on that point, which is like very rarely is about like getting something really, really right. Um, though I'd say some businesses like you have to take bets, and so you have to get some certain things right. So those parts are I think, kind of depends on the situation, industry, whatever. What I think is very similar across all of them is the number of things that you must consider at all times, and like juggling all of them and like moving the chessboard forward on all of them. Right? It's like there's it like the business that or not the line of industry, the line of thinking that building a business and investing are antithetical against or antithetical to is like classic like R&D work. It's like very, very antithetical to it because you're so focused on one thing and only one thing and whatever else, right? It's like if you're trying to like, sure, if you're building like a single line product and that's all that helps you succeed as a business, then like fine, that works. And by the way, that's why I think most people aren't good at building businesses. Usually they're really good at building a product that becomes a business, and then everything else kind of like could work out well or could not work well depending on like how good they are at like building businesses and how good the product is. But building a business on its own, aside from the product part of it, as a standalone, is a multi-dimensional, multi-faceted, multi-bet part of the multi-part discipline that I think is very similar to investing, which is you need to be thinking about a lot of different things all at the same time, constantly, and it's a sort of all-consuming sort of like endeavor.
Makes sense. I want to talk about the mortgage industry real quick. You have learned a lot about it in the last 6 years and more, I guess, on the investing side. So uh, there's a lot of regulations that were instituted after the financial crisis across federal, state, um, Fannie Mae, Freddie Mac, and so that was the most surprising thing I learned working at Valon was just how much regulation there is in the mortgage space, and a lot of this was meant to help homeowners. I think it's questionable how much of it has, right? Because what it's in my view it's had an impact on is restricting innovation. Um, I'm curious your view as a startup CEO operating in the space, how you view the impact of regulation. Maybe your reaction also as you dug in to see how much regulation there was in the space, and then also maybe if you could wave a magic wand, how you would change it if at all.
I mean, my pitch was that the regulations meant that there was a moat. So I'm a a happy beneficiary of regulations. But jokes aside, I think look when you first look at it, right? It's like there were like hours and hours. Like there was a like 3 to 6 month period which every day I just read like 18 hours of regulations, and that's like all I did as a job, right? Just like every single day, line by line, read every line, categorize it, try to factor it into like how the regulations all worked. And so that really really sucked. That was not really fun. Luckily it was also during COVID, so what else was I really going to do? Fine. But I look, I think it's hard to really, as a person who like really deeply understands the purpose of the regulations and obviously is building software around them and whatever else. I get why they exist and I get what they're for. I can also most certainly tell you that they're imperfect because that's just how these are put together and that's how they're built. And there's like a much longer conversation around like how society should look at like cooperating when it comes to you know sort of different incentives and different behaviors that they're trying to drive, right? But ultimately, I can at least say, and to sort of avoid the longer conversation, I can just say regulations are um, the result of a lot of different initiatives to try to do something that is neutered or it's not done the right way because of all the different sort of asks and requirements from all of the uh, parties that the regulators as well as the politicians have to adhere to. So let's put that part aside. When it comes to Valon's like ultimate like incentives and sort of my perspective on it, I ultimately think that we as a sort of like business and as a sort of industry need to work with people to like think more, come up with better incentive mechanisms, right? That actually like result in the behaviors that we want, as opposed to put them in effect before we actually truly understand what's going on. Um, and I think if anything, every time we see this, like I think regulations that are put into place when you have almost like unanimous consensus generally end up to be a lot better. And regulations are put in place when you have like one party or another trying to dictate their public policy stance generally end up being ridiculous in a lot of different ways. The things that stand the test of time are generally like pretty good concepts, right? Um, and so I'm even though it's against like I think our interests as a company, I would say having regulations be more well thought out before they're put into place is a better outcome for the industry and probably like overall like industry dynamics.
Cool. I have one more question before I let you go, and it's a fun one. So it's a two-part question. First is which of the Grand Slams, tennis Grand Slams, is your favorite? And the follow up to that is
I can just answer. It's
between
Roland Garros.
Roland Garros. Okay, well, who's going to win this week or next week?
I mean,
Is
it's
it your
probably
boy your
Carlo.
boy Alcaraz?
it's Carlos or it's Yannick, right? It's like only one.
Well,
One
and
of
so
the,
that was my second question. Is I'm going to hold you to this. We're going to check in 10 years. Over the next 10 years, who is going to win more Grand Slams, Sinner or Alcaraz?
I think it's Alcaraz. I don't think by a large amount, but I think it's Alcaraz.
Okay.
Mostly
Any follow
because
up to
it's
why?
well, the follow up to why is I think Alcaraz is a more high complexity player, which lasts a lot longer, right? Versus when you look at like Yannick's almost like robotic, uh, but very consistent playing style, right? It's great and it works, but it requires a lot of sliding. It's very like tough on his body, and all those different things. Yes, like Carlos does do crazy stuff all the time when it comes to physical feats, but I don't think I think he does it more in excess than it being really important for his game. Um, I think having touch and all these different things like basically result in you having a much like higher longevity career. The other part is like I think it also results in the game if it changes having less of an impact on your game, right? Meaning like this whole like debate, right, about like the speed of the courts and like how that ultimately has affected like the stats of like Federer, Djokovic, and to a lesser extent Nadal. Like I think the more variety you have in your game, like the more you can like play on different surfaces, right? Which is why I think Carlos has a okay record on hard, but like when I say okay, I mean obviously the guy's won a Grand Slam, like and whatever else, right? He has a phenomenal record when it comes to like French and or basic grass and clay, and I think that just ultimately like just speaks to his like variety and with mental maturity, whatever else, like he should be able to keep that up.
Okay, last thing I'll say here is I'll give you credit as a talent spotter because I remember before Alcaraz, anyone knew his name, had your phone out showing me highlights from him, and I was like, I have no idea who
Dude,
this guy is.
it's
So
almost like crazy. Like I watched Yannick when he was 16. I watched Carlos when he was like whatever 16 as well, and I was like, this guy's amazing. He's gonna be awesome. And obviously, like I mean, whatever 6 years later, the other person uh, who is recently climbing up, which I'm a little bit more TBD on, like whether he'll be like Alcaraz. Is have you seen João Fonseca?
I think I've heard of him, but
Yeah, he's
haven't
like the
seen.
Brazilian. He's like 18 now. He's pretty good, but
All right,
um, we should watch him.
sounds good. Thanks for coming on, Andrew. I
All
appreciate
right,
it.
awesome. Thanks.